So good afternoon and welcome to another one of our live market overview sessions. We're joined today by Bilo of Crypto Society, and also a little bit later on Sylwia will be presenting some on-chain analysis to us. Welcome, Bilo.
Good day, everyone. Hope everybody's having a wonderful Sunday. I'd like to start by just having a brief overview, like we always start our sessions, with what's happened to Bitcoin in the past few months. For those of you that have not seen or participated in previous TA sessions. So we have this 1, 2, 3, 4, 5 wave structure, which culminated at the all-time high of 64K, more or less. The fifth wave structure was a very obvious ending wave diagonal, which is a very bearish way to end wave 5, resulted in an ABC correction down to 30K. This happened to coincide with, or if not coincide with, but maybe was a result of the Elon tweet saying that Tesla will no longer be accepting Bitcoin. Then there was the news coming out of China with regards to the miners, and finally the IRS 10K reporting news. Regardless, we did see this ending wave diagonal, which many of us chose to ignore because we were all in a very bullish mood, and there was a lot of opium in the market, and everything was going up without ever coming down. The result was this ABC correction, which was a perfect 1.618 Fibonacci extension. We've since then been in this consolidation, some call it consolidation channel, where we are playing in between 30 and 40K. This is the macro view of where we are. If we go back and see what we discussed last week, we have been following a potential Wyckoff accumulation in this region, which is very similar to the Wyckoff accumulation pattern that we see online. And this is basically the Wyckoff accumulation that we've been following. And if we look at the Wyckoff logic, if you just Google Wyckoff logic and you see what's happening. So assuming we were somewhere here, came down, did the ABC, then this is the channel we're in. This is the more or less 30K region, which we dropped to as the end of wave C. And then we have this channel where we broke below the channel. And this here is called the low volume sell-off, or the test. Not the test, excuse me, just the low volume, the spring, the low volume sell-off. We see this happen here on the 23rd of June. We have since followed the chart almost to the T, where we've gone up, come back and down, and done a test. Going back to the Wyckoff logic, this will be the test, and we're supposed to be on our way up. Now, I did mention last week that so far this potential Wyckoff accumulation pattern looks so identical to the academic equivalent right here, which to me was kind of like, things are never this obvious, and especially in crypto, the name of the game is to basically confuse and make sure that the whales and the powers that be are always on the winning side. So as much as we were following this accumulation phase of Wyckoff, which follows the logic very, very closely, it was just too close. So now, somewhere around here, I would bet a lot of people were going long because it looks like we had completed wave 1, wave 2, and we're going up on wave 3. Then we see the SWIC rejection to the downside. Now, the location of the SWIC also happens to be where we have the most resistance in this zone. And we're now in a descending wedge. We'll see if we break out of this wedge here or not, or if this wedge actually forms a channel. Because if it's a wedge, then it's bullish, because what we would basically be looking for, and I'm just going to try to draw this here. Here we go. What we would be basically be looking for in a wedge is something that looks like this, and then we would break out. That's a wedge. Versus what would happen if we do not form a wedge. If this wedge transforms into a channel, the price would do something like kind of like this, come down a little bit more, and then go back up, making this a channel, right? So you guys see the difference. So this is what we're looking out for right now. Do we break out or do we just come back down and make a channel? We also do see a channel. If I have it drawn somewhere before here, here we go. We also see a channel on the daily. You can look at this on any time frame. Let's say we go to the 4-hour, but just to show it to you, we see a channel that started here at the rejection I just spoke about, 29th of June. We came down here, came back up. So we have 2 touches here. We have 2 touches here. This classifies it as a minimum for a channel. So we'll see. Do we come back down? Do we go back up? This is very unclear as of this moment. There's nothing really to say. The week, last week's TA, live TA, we identified we were somewhere here last week. It was the 4th of July. And we identified this potential rising triangle. As you know, a rising triangle is expected to break to the upside most of the time. So we had this action here, and then finally we got to this this price action here, where we just tumbled down, and we've been going down ever since, making lower highs and so far lower lows. So we'll see what happens here. So a lot on the charts that right now make it not clear which direction Bitcoin wants to go in. We also were looking at this channel over the past 2 to 3 weeks, actually. This started on the 22nd of June. We identified it pretty early, and we were following this channel quite well until we broke out of it here on the 7th of July. Now, the good news, and it is recent news, is that we were also looking at this resistance line, declining resistance line, which we failed to come above here, 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 and in so many places. We are currently above this line. So that is a good thing, because this was a previous strong resistance, which is now seems to be turning into a support. Not sure yet. We dipped twice under it here, came back up, went above it here a bit more, but couldn't make it quite well, and came back down. But this is a line I would keep my eyes on. The important zones for Bitcoin, the very important zones for Bitcoin, are presently to break are the 4-hour 200 EMA, which is the yellow line, which is currently sitting at approximately $35,000. So it's not such a far fetch. The next important resistance for Bitcoin to break is the 200 EMA on the daily, which is equivalent to the 1200 EMA on the 4 hours. And it's presently sitting at 39,435. Now, everybody used to talk about the 42K being important. It is important, but at the time when people started to bring up 42K, it was because the 200 EMA on the daily was around 42K. As you know, the longer we stay below an EMA, the more the EMA slopes to the downside. So currently, the 200 EMA, which is shown here as the blue line, right here, it continues to slope to the downside as long as we stay below it, and for however long we stay below it. So important, again, the 2 zones we want to break are 35.3 and 39.4 for the time being. The 42K is still important, but for a different reason. It's nothing to do with EMAs. The 42K is important because, and I'll just go back to the chart showing the counts, because of this. The top of wave 3 is at 42K. Or 41,800 and something. Let me just see here. 41,950. So pretty close. That's the top of wave 3, and that is the next point of resistance for Bitcoin if it actually does break through above the 200 EMA on the 4-hour and the 200 EMA on the daily. There's a lot of little other nuances that we were looking at, like perfect targets of waves 1, 2 in this accumulation zone. But like I said, this wave count has broken down. I'll just zoom back into a smaller time frame so we can see it. So we were looking at waves 1, 2, And then we're hoping for a wave 3 to bring us here. And the wave 3, which under Elliott wave principles, a perfect wave 3 is a 1.618 extension of waves 1 and 2, which would have brought us to the top of this accumulation channel. So everything was really looking very similar to the Wyckoff accumulation logic. And like we mentioned last week, sometimes too good to be true because it's too obvious. So we're breaking down here a little bit. We're breaking down, and we do see, we can identify there is this kind of resistance here. It's not perfect. It's not a perfect line. To me, it looks like it's converging a little bit. Not enough to call it a very strong bullish wedge, but there is some convergence. We see it. The convergence is there. And there is the potential for us to kind of go back up here a little bit, but it's not a strong bullish signal at the moment. It's just showing us that the selling, although it's happening, is slowing down. That's all. You see the volume bars here kind of go to the downside. So we are reducing the speed at which Bitcoin is dumping or going down a little bit. So a lot of mixed signals. Going back just to refresh, this line is important. We're above this line. We are in this accumulation phase. We do have some wedges pointing to the downside, which are bullish. But aside from that, it's a wait and see situation. So this is what led us to start to think about how do we analyze this further? What can we do in order to identify what's happening behind the scenes, what we don't see on a chart, what we don't see in the news. And this is what's called on-chain analysis. So with us here today is our very own Sylwia. She is going to explain to us all how to look at Bitcoin behind the scenes, how to do on-chain analysis, and what things to keep in mind. It's going to be a basic explanation for now, because on-chain analysis is a complex field and takes a lot of time and effort and experience to properly understand. But I think the basics that Sylwia is about to share with us are going to be very valuable to all of us in trying to understand what's happening behind the scenes. So with this, I'd like to welcome Sylwia into the conversation. Sylwia, you there?
She ran away.
Hello, I'm here.
All right. So you can just share your screen. I'll stop sharing mine.
Okay.
One vodka shot later.
No, only coffee today. Okay. Do you see it? Can you see my
Yes.
screenshot?
Yes.
Yes.
Yes. Thank you.
Okay, so let's start. Hey guys.
Can't hear you.
Yeah, she just said to wait.
Yes.
Pampai said to wait.
Why, Pampai?
He's doing something. He's fixing something in the background.
He's hacking the camera.
Oh, was this a race? 3, 2, 1, go!
Okay, hey guys, my name is Sylwia. You can find me on TG Crypto Society as this mean girl who very often ban people. No, I'm just kidding.
Not true.
Not true, yes. Today I would like to talk a little bit about the analyze on-chain. I know it's a very sexy topic, and we can read about this analyze in most of crypto-related websites like Twitter, CoinDesk, even Telegram. And everyone has started to be interested in this topic. And probably not too many experts are mentioned that the most valuable indicator are paid. And unfortunately, these fees are not low. And today I would like to show you my analyze and how to I read the market for free, using also valuable and reliable sources of information. I will also show you how I interpret these charts and will tell you what I exactly see. This is my first presentation, so I ask you for understanding. I know my English is quite foreign accent also.
You're very understandable.
Okay, I will improve it, I promise. Okay, so what exactly is on-chain data and why I think it's so powerful? On-chain data is nothing more than a standard transaction on the current blockchain. And that transaction was carried out on the blockchain. Because the blockchain is public and fully transparent, we can see all transactions and they will leave a trace. So we can back to some transaction even from a few years ago. And currently, some companies such as Glassnode and CryptoQuant specialize in data logging and processing this on-chain data. And they have, of course, a variety of indicators that allow us to measure the current situation and also allow us to have signs if we are on the top or maybe on a potential bottom. Working? Okay. So I will show you how to do it for free. We'll use today such website like Glassnode, CryptoQuant, look into bitcoin.com, and BitInfoCharts. And why I think this on-chain data is so powerful. Personally, on-chain data is a huge market advantage for me because I know that it's very difficult to make a standard fundamental analysis in crypto because we don't have such indicator like price to profit as in the traditional stock market. So it's very difficult to value this market. We really don't know if we are buying high or buying low, but in the crypto market, we have some tools that, in my opinion, are even more accurate than the indicator in the traditional market. And for example, a fundamentally cheap asset in terms of price to profit on a stock exchange does not mean that it will grow fast. I'm sure that you know some stock exchange investor that they bought some cheap stocks, and probably they are waiting a few years to have such gains as we can generate in crypto. And in crypto, we are able to make this probable for a period of several weeks before a possible peak on bottom. And because we have some indicator which works very well and repeat all of the cycles we had. We had 4-year cycles, and this indicator are behaving the same. So in my opinion, this analysis is incomparable to any other market. Because nowhere we have to, neither on the stock market or a gold or a silver. And data on-chain discounts the emotion of investors, shows whatever the investor has on a large gain or a large loss, whatever they panic or they feel euphoria. We can see if the institution are on a big loss, who is exactly accumulating, whales or a retail. And such data is not existing for traditional market. Blockchain is very transparent, so nothing can hide it. And for retail investor, it's very fair. And okay, I know that everything is sounds very nice, but there is one problem. These indicators are paid. Some of them cost less, some of them cost more. But I will show you the most common website. It's Glassnode. show you how these prices are looking like. We can see that we have 3 tiers. There is tire standard. It's for free, tire advanced and tire professional. And as you see, the most valuable indicator in tire free are costing even $10,000 per year. So I'm sure that it's a lot of money for most of investors. And many investors are preferring to invest it in some gem coin and not necessarily buy this access. So today I will show you how to do such analyze for free without paying such high fees. And we will discuss about 5 indicators today. I don't want this analyze to be too long. I don't want to bore you. I will show what I think are the 5 more basic indicator, and if you like it, next week maybe we will discuss about other indicator and see what they show.
That sounds great. Thank you.
Okay. And for first, I want to say that these indicators are very long term. They are not good for traders, especially for leverage traders. They are showing us long-term moves, long-term accumulation or a long-term sell-off, and it's very good for investors who are not aware of being lost. So let's go to the first indicator. The first indicator is NUPL. It's a net unrealized profit and loss. Total amount of gains and losses from circulation supply. You can find it on a glass note. Let's go. Okay, as you see, it's a tier 2 indicator, so it's paid, but we have for free version data to 2020. I will show you how to read our current situation, but for first, let's talk what exactly is this indicator. We calculated by subtracting realized gains from realized losses, and the values above 0 show us the net profit, and the values below 0 are recorded as net loss. Values above 0.75 are showing us euphoria. And these values was always showed as potential tops in all cycles. And values below minus 0.25 indicate surrender, indicate capitulation, and of course it's only
Whoever's doing this, if you don't mind, okay, thank you.
That was a commercial break.
okay.
Probably. Sylwia, just a question on this. So this net unrealized profit and loss, is this in margin positions? Is that why it's unrealized profit and loss?
No, it's the unrealized profit and loss on our wallet, on the BTC chain.
I see.
Yes.
And what does capitulation mean?
Could you repeat, because I don't hear you?
Yeah, sorry. What does capitulation mean?
Capitulation, it's a psychology of investor. Investor just give up. Just like here, they are feeling euphoria, and here they are talking BTC is over and BTC is going to
Okay.
0.
Okay, thank you.
And okay, so first let's analyze the past 3 years in the previous cycle. I will try to share with you some photo. Okay. Do you see this photo? Net unrealized profit and loss, and some my drawing.
Yes, yes, we see it.
Okay. Okay, so in the 2011, we had a peak and the NUPL was about 0.75. The same in 2013, we had a double bottom. Also, the indicator was in euphoria. And of course, the same situation was in 2018. And let's see how the situation is looking today in 2021. We will use website Look into Bitcoin to see it for free.
And Bilo, in short terms, euphoria is the moment when everybody is thinking when Lambo,
Yes, yes.
and capitulation is when everybody is saying
When Batia
I lost my life savings again.
or when Batia.
Yeah.
When Fabio.
Yes,
Fabia,
when
Fabia, that's it,
some
Fabia,
investors are
sorry.
thinking when Fabia. Okay, and on this website, Look into Bitcoin, we
Sylwia,
have very
sorry to interrupt. Can I ask a question? I
Yes.
hear a lot of the time when I'm watching YouTube videos that they're talking about diminishing returns as we go through the various different Bitcoin cycles as time moves on. That we are looking at a smaller amount of return based on the investment that's put in. If that's the case, then based on the chart that you were just showing with the euphoria, would it be the case that after a certain amount of cycles we'll stop seeing the euphoria phase hit because of the diminishing returns, and we'll start to see it taper off, I guess, into a sort of triangular pattern? You can see at the moment you could not quite connect the bottoms of these of the capitulation and the tops, but you can almost see a line that's where it is moving down. And like now, for instance, we've hit the greed section. We haven't quite gone up into
Yes.
euphoria in 2021. And would it then be the case that maybe in 2024, 2025, or in fact even now, that we wouldn't get as high as euphoria, and that the horizontal line that has been shown as being euphoria and greed and optimism, denial, and so on, could it be the case that actually those shouldn't be on a horizontal, they should be on more of a downward slope, if you like, to account for the diminishing returns?
Okay, so I understand you are asking, will history not repeat itself this time, yes?
Yeah.
Or it will be different this time?
Yeah.
Personally, I don't think so. But of course, this is my personal opinion and not an investment advice. And, generally it's said that what we have now on the financial market has already happened and will happen in the future. It's very common on most of markets. And the psychology of people was, and always be the same. Maybe something will change when we start using artificial intelligence, but it might be very, very long time ago. But history repeats itself, and based on Newell, as you see, it was repeated for all these 4 years cycles. And of course, we can tell that many people now are using Glassnode. And most of people want to be the first who will sell. Yes? But as I said,
I was thinking.
yes, but as I said, this indicator are paid we have to pay for it. And do you really think that some retail investors are paying such fees? Personally, I don't think so.
It's a good point.
Okay, so let's zoom this year. How it looked like in 2021. We have this here. Okay. And look at it. We was very close to euphoria in February when BTC cost about 56K dollars. And for me, it was very hard time, very stressful because this indicator is very often working. And I will show you in next indicator how miners behave in this situation. But look how this indicator behaved right after 10K down here. And look how this indicator behaved when we had a top on $63,000. Do you see it? The NUPL value was lower than when BTC cost lower. So
You see a divergence there. No, it's true.
oh, there's no divergence.
It's a divergence. Pampai.
We're in trouble.
Possible head and shoulders.
And such behavior on the market is showing us that we hadn't ended up. We hadn't even touched euphoria. We was very close, but we haven't touched. And what we can see.
Well, this is why I was asking about whether that line should be horizontal or whether, because of the diminishing returns, whether it should actually be on a slight slope to account for that. Because obviously, as the returns diminish, this whole chart will in effect constrict, like as if it was going into a squeeze, because you would have less as there was more and more money that was put into the market. The chart would become less volatile, like other markets. So the dips would be smaller in theory, and the high points would also be smaller, or they wouldn't, but they would be closer to one another, because it would take so much more money to move the market that you couldn't see quite such a dramatic dip, because once there's, say, 10 trillion in the market, it wouldn't necessarily be possible for one entity or even a coordinated 10 entities then to be able to drop the market down so dramatically. Do you see what I'm saying?
You were talking about February, yes?
Sorry?
You were talking about February, that? Yes,
well,
in this
yeah,
situation.
Yeah,
okay,
exactly.
Okay.
I'm talking about that. So if you look at 2012, the peak into the euphoria is higher than any of the other points, and then when you go into 2013, 2014, the same thing. It's come slightly down. Then when you go to 2018, it's only just coming into the euphoria section, and now in 2021, in say February, we're not quite up in euphoria, but you can see that there is a line that could be, so that the line of euphoria, actually, if you slanted it to have it connected to the peaks, that probably forms a diminishing return line. Do you see what I'm saying?
But what I want to say that this euphoria patch, we of course haven't touched, but it was very close, and the price of Bitcoin wasn't at the top. And always in the cycles, like in 2018, 2013, we had euphoria on the BTC price tops, and here we haven't price tops because the price top was at 63, 64K for BTC.
What price would it have needed to be to hit the top, do you think?
Based on some on-chain data, I think we should touch about 120K at least.
Nice. Still another 100% on top of, well, just under 100% on top of what we had hit.
And generally, this moves we have here in this year, in this cycle, there was before. History repeats itself. BTC is not growing too fast. It's not growing too slow. And the only one difference was in a COVID time last year. That all financial instruments behave in the same way. So you can say that it was some maximum. Okay, so this indicator for me is bullish. It's not stress for now for me, and long term. So of course we may have to wait for longer for the upside, but bullish. Okay, so let's talk about second indicator. It will be easier. It's very basic. Which is easily accessible for everybody, but also tell us a lot about the situation of the market, the psychology of the investors, and the state of the BTC network. This is very important. The BTC network will not be blocked. And this indicator is transfer fees price. Very, very basic. We can check it on the website. Info charts. I personally check such data on this website. I'm sure you can find such data also on another one. But for me, it's very easy. You can also find some information like market capitalization. And even we have weeks per day about Bitcoin, Ethereum, and some Litecoin. Okay, so let's check how the fees are looking now. Start here. Average transaction. Well, as you can see, the price of the transaction fees for BTC are very, very low now. It's about $5, $6, $7. It's very, very low historically. And such low fees will maybe in January. Yes.
Sorry to interrupt you, Sylwia, but I think your microphone is, there's a bit of interference. I don't know if you're...
Oh, okay.
Yeah, that's
Is it better?
Yeah, much better. Thank you. Yeah, continue.
Sorry. Okay, so can you hear me now?
Very good.
Yeah, this is much
Okay.
better. Thank you.
Okay, so generally, these prices are the lowest prices this year and the lowest in the all full market cycles. As you can see, the fees was the highest always on the top. And for now, we had some creases on BTC because of hash rate. I can show you how it's looking like now. As you know, in China, the mining machine has been shut down, the mining power has fallen, the hash rate has fallen, and as you saw, that the fees are still very low. Look how huge was this hash rate dump here. Very, very huge dump. Nonetheless, the situation looks maybe scared, but as I read, miners are moving out of China. Hash rate centralization is ending, and it may be the last China fad. It may also finish.
Would you mind zooming in to the 3 months, Sylwia?
Zoom, yes?
Yeah, into the 3 months. At the bottom there, it says zoom, 3 months, 6 months, 1 year. Yeah, thanks.
Okay. You are talking about hash rate, yes?
Yeah, yeah.
Yes. So as we see, yes, we have some upside. Oh, some problem? Can you hear me? No?
Yes.
Okay, okay. And usually when the hash rate was falling down, the prices of transaction fees was exploded. And probably if the hash rate will fall down when we was on the top, we would saw transaction fees even more than $100, and it would be very, very dangerous. But for now, this indicator looking very good. Historically, the best shopping was when fees was very low.
So the best time, historically, the best time to buy Bitcoin was when the fees were low?
Yes. Oh, yes. Okay, so time for another indication. This is probably the most exciting topic when it comes on. It's my PC or do you hear?
Can we mute the iPhone person?
It's not mine.
Yeah. Thanks.
And this indicator is probably the most exciting topic when it comes on to on-chain. Twitter is going crazy in this topic, and there is a lot of fake news is created. A lot of people think also that this indicator is the most important, and we should to look only into it. And this indicator is the miner outflow and the miner sell off. So if the miner are accumulating or if the miner are selling their Bitcoin. And why did I say that we have a lot of fake news? Because this indicator is entire free on Glassnode, and access to it costs about $10,000 per year. From what I sometimes read in Twitter, even some people who have access can read it. So I will show you how to check miner outflow for free.
Hold on, Sylwia, sorry, just to clarify. So you're saying that this indicator is not free? It costs about $10,000 a year?
Yes.
But there's a way for everybody to see the information nonetheless?
Yes, for free. On Glassnode, we have to pay about $10,000 per year, but there's another website where we can check it.
I see. Okay.
This website is CryptoQuant. So, this website. You can register here for free to see more indicator, more charts. The miner section. We have all miner output. And on this website, we have only data from the last 2 years. And basically to compare to history, miners have always sold their Bitcoins nearly about to the top. I can show you how it was looking like in the past. I have some screen from Glassnode.
Sorry, you were saying that the miners sold when what was on the top?
Could you repeat, please?
Yeah, you were saying that the miners sold when something was at the top on the previous chart.
Yes, miners was selling always when he was very close to the top. As you can see how it was in 2013 and 2018, right after big sell of BTC from miners, we had a top, and a few days later we had a dump. So that was looking in the past years, and that is looking in 2020. And let's back to.
Sorry, Sylvia, I'm not sure, but I really think it's your mic. That there's a, I don't know if there's an earpiece you have that's moving or something that's moving, but it's creating this static. I don't know if you have an earpiece on.
I don't understand.
Okay. Just that there's a lot of static coming from your mic. I don't know if there's something you could do to adjust. From your microphone.
Oh, okay. I will. Okay. Is it better now?
Yes, much better.
Okay, okay. Okay, I'm back. And let's see how this chart looked in 2021 year. As we see, we have huge sell-off in January. It was historically one of the biggest sell-off. And in my opinion, it could be because of the NUPL was hitting high euphoric level. A lot of people use on-chain, including more large miners. And let's see what is look like now in May. During the biggest drop, it was about here, May, yes. And as you see, miners hasn't sold. Very low sale, one of the lowest in those 2 years. And if you read somewhere on the Twitter or another website that the current dump was due to the sale by miners, better leave this channel because as you see, it's really not true.
Yeah.
The data are showing us that we are on the lowest sell-off within last 2 years. So the miners hasn't sold the top. The miners also hasn't sold in May on this dump. You know, this indicator does not lie. Until we see miners making side peaks, there's no stress because, you know, miners are not charity. They have to maintain a network, pay for electricity, and of course they have to be ready for a bear market to come. And they know that the fees of BTC transfer will be low, so their salary also will be low. and they are going to sell their BTC when the price is very attractive to them. So if this stock wasn't attractive for them, they are probably waiting for a better price.
What I find interesting is I'm looking at these peaks, these red peaks where there's the most minor sell-offs, and it almost looks like they're providing liquidity, not liquidity, they're providing, they're meeting the demand and selling. They're actually helping propel the price of Bitcoin to go higher. Because
Yes, right.
if you see in those areas where there's major sell-offs, the price actually went up. And it just looks like they were the ones providing the supply to this, I guess, high demand. And maybe in those zones, like you mentioned, it would be interesting to see if there was the levels of euphoria were on a rise or on a high. And therefore, there was a higher demand from the market. And this demand was supplied by the miners. It's actually very interesting to look at.
Yes, but NUPL is showing us if people are on a profit or on a loss. So this euphoria was because people hasn't realized their profit. And here I think you can be right, because in January we had a lot of information that institution was entering into the market. So yes, there was some articles that we don't have BTC to buy.
It's provided by the miners, obviously.
Yes.
Very interesting. Thank you.
Okay, so the next indicator.
Sorry, Sylwia, just an obvious question. So why would somebody pay $10,000 to Glassnode when it's free on CryptoQuant? Is there any difference in the data
Yes.
or specificity of the data?
As you saw on CryptoQuant, we have only information from the last 2 years. And to make this analyze valuable, we should compare it with last cycles.
I see.
But of course, we can use some screenshots from Glassnode.
Yeah.
There's a lot of in Google, also on Twitter. So it may be easy for us. Okay, the next indicator is how many BTC are on the stocks now. We can search this information also on CryptoQuant. Let's go into this website. Okay.
So when you say how many BTC, what do you mean by that?
How many BTC is transferred into stock exchange?
Oh, okay. Okay.
Oh.
Into the like a centralized exchange, right?
Yes, I have to sign in, so maybe I will stop streaming for
stop
very short time.
Yeah.
I don't know why I was logged out. Okay. I'm backing. Can you see the chart?
Yeah.
Okay.
Yeah, it's coming.
Okay, very nice. We have all exchanges inflow. And what we see in the chart, certainly we had a flood of BTC on the stock exchanges on this last dump when everyone was panicked. As we checked earlier, there weren't miners. Maybe we will check who sold their BTC in next weeks. For some time now, there has been less and less BTC in the exchanges, which means that fewer and fewer people want to sell it. A BTC transfer sometimes takes several hours. So if someone really wants to do a quick sale, they will definitely have deposit this Bitcoin earlier.
Mhm.
The less BTC on the stocks exchanges, the higher price people will have to pay if they will want to buy it. It's a simple law of supply and demand. And summing up this indicator, I'm watching it very closely. It currently looks not bad. I hope that the amount of BTC deposit on the stock exchange is in downtrend. This is what it's look like now. And
So Sylwia, is there a way to kind of, the chicken and the egg, what came first, the deposits or the price? How do you know? Is it something you look at simultaneously, or is it something that you can actually ascertain? Okay, the price went down, then there was inflows into the centralized exchanges, or there was inflows into the centralized exchanges, then the price dumped. Is there a way to dig deeper?
no, logically, the first should be a big inflow.
So inflow first and then dump, right?
Yes, yes.
But there could also be already a lot of BTC on the exchange. I mean, it doesn't have to be that new BTC came onto the exchange for it necessarily to dump. So how do we know there's a scenario where there's already a lot of BTC on the exchange, which I'm sure there is, and the price started to dump, and then these guys said, oops, let's also put our BTC on the exchange because we may have to sell if the price goes below a certain level. Like, is there a way to figure out, did the dump start before the spike in BTC inflow? Is there a way to do that?
No, we can't use only one indicator.
Okay, so there's several things you have to combine then.
Yes, yes, of
Okay,
course.
okay.
Because, sometimes when people are transferring their BTC into exchange, they, of course, need to change it into altcoins.
Mhm.
Yes.
Mhm.
So we should see who is transferring. Is it miners? Is it whales? Is it long-term holders? Or is it retail? Usually retail is changing it into altcoins. I don't think that miners will transfer their BTC to change everything into altcoins. No, it's under any.
So there is a way to find out where these inflows are coming from. Is there another indicator that says, okay, this is miners, this is whales, this is retail? How do you dig deeper then? Or is that where you need to upgrade your plan?
We can follow BTC holders by the amount of they have in their wallets. I think we can talk about it in next week if you want.
That would be great. Yeah, definitely. So how to follow? So for next week,
yes,
how to follow wallets to determine who's doing what, right?
I will try to do it also for free, yes, because we have such data on Glassnode, but of course they are quite expensive. But I also have some websites to follow similar information for free. So I think we can do it in next week.
Great.
Okay, and the last indicator, it's MVR Z-score. MVR Z-score. This indicator is the ratio of reality value to market value, and Z-score is a statistical method based on standard deviation. It uses blockchain analyzed to identity periods where BTC is extremely over or undervaluated relative to its fair value. Let me not go into mathematical detail. Let's focus on how to read the signals from this indicator. We will use also the website lookintobitcoin.com. It's for free.
Just quickly, Sylwia, before you
Yes.
move on, do you think that this pattern of the manipulated Wyckoff pattern that's happened during this cycle, do you think that that has perhaps changed the way that the bull market is going to play out completely?
I think the Wyckoff. Yes.
Because before we've seen in other bull cycles that the market has moved in, I guess, a pattern of psychology that is completely natural, whereas this time it's moved in a pattern that's been manipulated to happen in a certain way. And now that we've seen the distribution and we've come down in price, are we necessarily going to see a repeated pattern of bull market behavior that we would have seen before, or that we would have seen without the Wyckoff accumulation, Wyckoff distribution pattern having taken place?
In what I believe is, as more people believe in some indicator, as more it's probable that it will work. And the same is with NUPL indicator. As you saw, when we saw blue color right after there was a dump, and the same situation maybe with Wyckoff. When people now see there may be accumulation, there is a bigger possibility that they will accumulate it now. But this is only my opinion.
We're also currently seeing news that there are various different companies, like for instance Apple, that are saying that they are accumulating or have accumulated $2.5 billion worth of Bitcoin, but yet we haven't seen the chart move much, or we have, but it's only been small amounts up and down. It's not like, for instance, when Tesla said that they bought $3 billion worth of Bitcoin, we saw the chart move quite a lot, which I'm guessing is partially because retail then thought, wow, we've got Tesla in, let's go and stock up because the market's going to start moving massively. Yet now we're not seeing so much movement. Do you think that that's caused by shorts being in place to suppress the price down while they're accumulating? And if so, do you think that this is something that can continue happening as time goes on, so that all of these institutions can buy in at this sort of range of price, and the price not necessarily move up dramatically?
No, I don't think so.
Okay. These are just thoughts that I'm having. Because I've seen at least two different companies that have suggested that they are buying or have bought already somewhere between $2 and $3 billion worth of Bitcoin, and yet price, since the distribution pattern has happened and we've come down, price hasn't really moved up a great deal. It's only ranged in a certain point, in between two certain points, or a rough two certain points.
It's probably also the phase of the market that we're in, where there's a lot of uncertainty and still a lot of fear, versus when Tesla came in, things were kind of up on the move. Things were going up. There was more people learning for the first time about Bitcoin and investing, and then there was what do you call that? That fund. I forget the name now, but everybody.
Grayscale?
Grayscale, yeah. Everybody was hearing about Grayscale, and it all happened around the period where Bitcoin was kind of going up. Versus now, we had this major correction. There's a lot of FUD. There's a lot of fear. People are still talking about 20K. Some are even talking about 15K. I think people are just reluctant, and that's the main reason why Bitcoin is hovering in this range. Definitely pumped by the Wyckoff accumulation. I mean, everybody's looking at it. So, like we said last week, something so obvious, I'm not sure it's going to play out the way that everybody thinks it will, because for somebody to make money, somebody has to lose money.
Yeah,
you can't all have the same, information in terms of when to buy and when to sell. We'll get back to the Wyckoff after. There's a few interesting things to take a look at, but yeah, I think your point of Apple and all this, why it's not making such a big difference is the psychology of the market is completely different right now.
It's not just Apple. There's also George Soros is
Yeah,
supposedly
yeah.
entering the market, and that was a few billion.
It actually entered a long time ago. George Soros entered when Bitcoin was below 10K.
Okay.
But yes, it is. I mean, it's a valid question. Why aren't we having the same effect? I really think the short answer is that the market psychology is just different at the moment.
Okay. Thank
And
you.
guys, remember that the most of BTCs from the market, about 13 from 18, is in the hand of only a few wallets, in the hand of the whale. So if they will not sell, so only the retail may do some sell-off, or the miners. And what we saw, miners are not selling. And if the whales will also not selling, so price have to go up.
Yeah.
If the institution will enter.
And it's
There's
actually
no another way.
it's actually funny you just said that the 13 to 18K region is a few wallets, because I remember distinctly during that period swearing by everything that was holy that Bitcoin could not go up there. It didn't make sense the way Bitcoin went above 13K. I mean, the amount of resistance that was there, and it just went through it like nothing. I mean, there were just huge market orders going through, and a lot of people got liquidated around those regions. So definitely this was an orchestrated bump, and very few people ended up buying in large amounts at those prices, but very big few people.
Also, some BTCs are lost for forever.
Mm.
So
Which is
we
a good
shouldn't count it into market cap.
I know of a few cases of that personally from friends that have had Bitcoin and lost them, which must be pretty upsetting at this point.
Terrible. All right, Sylwia. So MVRV.
Yes, let's back into the last indicator. We have this indicator also on the Glassnode, but it's available only to 2021 year, and of course we are interested in this year, but we can check the history with the Glassnode, and we can use a free version on website lookintobitcoin.com. As we see, this indicator also generates us potential tops, and all values close to 9, just above this red zone, are generating us potential tops. And how it was looked in 2021 year. The value of the indicator was about 7. So it was very low. The danger zone is 9. So for me, this indicator is also no stress, maybe bullish. Okay.
So I guess the point you're trying to make is that the people that know how to read on chain had no reason at around those tops to sell based on this information, right?
Yes, based on chain, there wasn't any top. Okay, so that's all I had to say. I wanted to keep it short and to the point, and I hope it helps you analyze the market for free. If you like it, I can try in next week to discuss another indicator, also maybe for free, or maybe some paid one. Do you have any question? Do you see the analyze on chain on your daily basis, or maybe you prefer only TA?
So first, thank you for your time. It was,
Thank you.
I'm sure for everybody else, extremely helpful. It's something I've been wanting to look into further myself. This on-chain analysis, and this introduction was very, very helpful. Will I be using it? Yes, absolutely. I'd like to learn how to use on-chain analysis to combine it with TA, combine it with what we know is happening in the market, FA and whatnot. I think it just empowers us that much more to be to have more chances on our side for winning in our trades and entering at the right time and exiting at the right time. So definitely very useful. And thanks again. Looking forward to next week's session with you.
Thank you.
Does anybody have any questions for Sylwia?
Okay, then.
If anybody
Bilo,
does.
continue.
Nobody has questions for Sylwia?
When moon?
Soon,
Soon.
very, very soon.
So just this is where we were before we broke off a little bit. So we wave 1, 2, 3 is acting. It's not acting as a wave 3 should act. It's still not invalidated. Wave 3 will only get invalidated if we go below 30,000. I personally don't think we'll go below 30,000 unless if we just go back to the Wyckoff accumulation chart. Let me just find it. So if we look at the Wyckoff accumulation chart and you compare it to the classical version of what it's supposed to look like, everybody, everybody's following this. We had our spring year where we went to 28K, and now we're somewhere here. Like I mentioned, we did the test and we went back up. So everybody's expecting us to go up here. Now, the only reason I would say we're not gonna go up is if this here wasn't the spring. If this here was not the spring, then the spring is yet to happen. You can easily see that you can draw this channel deeper and say to yourself, we didn't have a spring yet. And the spring is going to happen somewhere, let's say here. And then we're going to go back up. And then we're going to come back down and test. And then we're going to go back up. Now, this is just there's no reason for me to say this is what's happening. I'm just saying that the Wyckoff accumulation pattern does not necessarily have to be what we're looking at right now. And this here, we're looking at a 4-hour, we could be looking at it through a daily, could be looking at it through a 30. It's not that hard to try to fit into a narrative. So if you want something to fit, you'll find ways to make it fit. And I think everybody's trying to fit into what everybody sees, which is what we see right here, because it just works nicely. But what if this was not the spring? What if we're still in the channel and the spring is yet to happen? And then we go back up, test and go back up. Just keep keep an open mind. Don't in any situation think this is what's going to happen and that's it and that's all. You could always have a plan. You could always enter a trade, whether it's long-term or short-term, with a plan and say that, okay, this is what I think is going to happen, but it gets invalidated at a certain point. So for me, the invalidation point is 30K, because if I drop below 30K, that means this was not the test. There's no way this was the test if I drop below 30K. Because that's basically the end of wave 2 and the start of wave 3, which brings us out of this accumulation. So for me, anytime I drop below 30K, or let's say even dropping below this would indicate that the spring hasn't happened yet. But dropping below this would definitely invalidate this as being following the Wyckoff accumulation. Bearing in mind that it is kind of weird that everybody's looking at this thing and trading accordingly, I'm sure that at one point, the people, the whales, the institutions, the manipulators in this space won't allow for everyone to make money, because you can't all make money. Like I said earlier, for some to make money, some have to lose money. And if everybody's following the same plan, then there's stagnation. Nothing's going to happen. So there has to be a shake-off somewhere. Ethereum, we've mentioned several times in crypto society, is looking really much nicer than Bitcoin. If we look at Ethereum, we've had 1, 2, 3 hits around this region. It's like a triple bottom. We are in this potential inverse head and shoulders. Okay, this head and shoulders is currently bouncing on the 200 EMA. Excuse me, it's bouncing on the 200 EMA on the daily. This blue line, no, excuse me, I'm sorry about that. This is the 200 EMA here on the daily. This is the 200 EMA on the hourly, on the 4-hour chart. The yellow one is on the 4-hour chart. This small blue one here is on the daily. We're on this potential support line. We're in this potential downwards channel, which we broke out of here, but you see that the bottom of this channel has been quite reactive. So one of the ideas that I'm looking at is for this to complete an inverse head and shoulders, and we shoot back up. Obviously, Bitcoin has to also be in a position to be on the rise, because whether we like it or not, Bitcoin does dictate what happens in the market. But that being said, we have been seeing Ethereum behave differently than Bitcoin. The chart looks a lot better. The Ethereum chart is a lot more bullish than the Bitcoin chart is. I don't think it's enough for us to say that Bitcoin and Ethereum are independent and that Ethereum has decoupled from Bitcoin. I really don't think we're there. But we definitely see change in how Ethereum is behaving versus Bitcoin. If we go to BTC dominance, and I showed this last week, BTC dominance dropped from 27th of June to the 8th of July. It dropped 3%, excuse me, 6%. And in the same period, as BTC dominance dropped 6%, Ethereum dominance rose by, just to make it exact, rose by almost 17%. 16%. So what does that tell me? That tells me that, of course, for Bitcoin dominance to go down, alts dominance have to go up, but that Ethereum played a very big part in this increase. That it's not really going down in the same ratio or up in the same ratio as Bitcoin does. So there's a lot more happening with Ethereum than we think in terms of it eventually reaching that point where it decouples from Bitcoin. There's a lot more institutions that are looking at Ethereum. A lot of very large investors, you could read up on it, are looking at Ethereum as potentially the investment to be in versus Bitcoin. It's still relatively cheap in terms of what Ethereum does and what it can do. It's still relatively cheap. I think in a year to two, we'll look at Ethereum at 2K, and in the same way that we look at Bitcoin today at 30K when it was 4K just a year ago. I think Ethereum is easily going to be 10K or so in less than a year.
Bilo,
This bull market. Yes, sir.
do you think that, so I've heard a bit of conversation about potential flipping of the market cap of Ethereum and Bitcoin, and that it's almost inevitable that it will happen at some point because of the use case of Ethereum. Do you think that if that does happen, that the market will then start following the Ethereum chart, or do you think that it will continue following Bitcoin?
I personally don't think it'll ever happen. I don't think that Bitcoin will ever be flipped by Ethereum. But if it does happen, if for whatever reason Ethereum actually has a larger market cap than Bitcoin, then yeah, I would suppose that it would be leading the way in terms of the market goes up or down. Is it going to be as much as Bitcoin, in the sense that is it going to lead the market as much as Bitcoin does? I don't think so, because I find that the more crypto's been around, the more Ethereum has made a place for itself and a name for itself, the more there's other alts that are making names for themselves, like DOT, Solana, and other very, very well-known large projects. The more this dependence on Bitcoin is going to decrease, and the more use cases there are in the market, in the DeFi space, the less there will be a dependence on Bitcoin. And the key word here is usage. And the key word, again, is also adoption. People actually adopting the usage behind the DeFi space, not just investing in it. So instead of just being a holder of the coin, if you actually participate in the use case of the coin, I don't see why Bitcoin dumping is going to make you stop, for example, using a smart contract. You're going to continue to use that smart contract, and you're going to need to continue to interact with that smart contract, hence paying fees or paying coins or whatnot. And this continuous trading, once it becomes a part of our daily lives and second nature, I don't see why Bitcoin dumping or pumping will have an effect. So it will eventually be more stable. I also think that if Bitcoin is truly to become a store of value, to me, a store of value is not something that can dump 30, 40% in a few days. So for something, in my opinion, to be considered a store of value, it has to be more stable. So I think the longer or the more we advance in crypto as an adoption from all over the world, and more people that invest and know about it, the more we will see stability, and this volatility will decrease, at least when it comes to these large caps. Because everybody really wants to see Bitcoin be a store of value. It's everybody wants to see Bitcoin succeed, because everybody sees Bitcoin as the alternative to government and the alternative to manipulation by governments, or not manipulation, but control by governments. Whether it's the US dollar, whether it's what you can do with your account, whether it's investing in your retirement, or whatever the case may be. So in order for this adoption to take place, and in order for Bitcoin to succeed long term, and for those who wish for Bitcoin to succeed long term, the bigger players, it's inevitable in my eyes that Bitcoin becomes more stable, kind of like gold, and gradually increases in value over time, so that you feel comfortable saying, I'm investing in Bitcoin as a retirement vehicle, and not worry that when you need the money, it just so happens that it's on a day where Bitcoin dumped 30%.
Indeed.
So yeah.
There is talk of Ethereum becoming also a store of value because of the element of staking Ethereum on ETH 2.0, and
sure,
obviously it becoming Ethereum is the head of DeFi, if you like, and that's why the
absolutely
conversation takes place about whether it's going to flip in Bitcoin in market cap value, because proof of stake will be a lot more desirable than proof of work.
What do you think, Lewis? Lewis, you there? I guess not. Who do we have with us? Sylwia, you still there? No, she's not. She left. Oh no, she's there.
Repeat the question.
Yeah, the question from Pampa is, do you think that the market cap of Ethereum could eventually overtake the market cap of Bitcoin?
Yes, I think it's possible, but not necessary. But why I think it may be possible? Because of the new model of burning tokens. So when the market cap of Ethereum will reach some levels, and also there will be very high fees due to big traffic on the Ethereum chain, some tokens paid for fees may be burning. So we will have some deflation also.
So is the fact that Ethereum has an unlimited supply going to contribute to this potential flipping of Bitcoin?
That many tokens are also staked in Ethereum 2.0.
Yeah, that's what Pampa was saying, exactly. So you actually think it's possible for one day Ethereum to have a larger market cap?
Yeah, I think it may be possible, but it would be a total game changer in the market. And we will have some problem in the reading market. And probably Ethereum may not following in BTC moves if we will see such situation.
Okay. Thank you.
Thank you, Sylwia.
So yeah, guys, this is pretty much it in terms of what we wanted to present to you today. It's really, we're in a situation where directions are not clear. I don't think we can say we're going up or down right now. It's a watch and see situation. The other thing I just wanted to mention quickly about Ethereum, Bitcoin has been below the 200 EMA on the daily for over 50 some days right now. Ethereum is actually above its 200 EMA on the daily. So on many respects, Ethereum is outperforming Bitcoin at the moment. I think Bitcoin is just holding Ethereum back at the moment. Bitcoin's price is holding Ethereum back because the chart really does look a lot more bullish on Ethereum than it does on Bitcoin.
I believe that to be the case too.
Yeah. So just for everybody here, what we're looking for is the completion of this potential inverse head and shoulders. I think everybody knows what a head and shoulders is, but just for fun, we'll clarify that a inverse head and shoulders is, so this would be the left shoulder right here. Okay, this is the neckline, and then the right shoulder is what we're forming right now. So potentially, let's assume this is it, and we continue up from here. Potentially, this would be the right shoulder, and the target of an inverse head and shoulders is exactly the distance from the head to the neckline at the point of breakout. That's the theoretical target.
So when I'm charting and people are looking at my charts and they're asking about the big arrows and stuff, just so you know that those big arrows, they're a measured move, for like Bilo has just shown with the inverse head and shoulders. Equally with a rising wedge, for example, it's the distance of when the price action enters the rising wedge to when it hits the bottom. You take that as a measured move and you transpose that over to where it exits the rising wedge, or whichever other pattern it would be. Sorry to interrupt, Bilo.
Thank you. If we want to analyze just a little bit something and just want to go into a little bit more depth on this chart, and we look at the daily, so we have a high here and a low here. So we made a high, a low, a high, another low. So we're in an uptrend. So technically here, we have a higher high and we have a higher low, okay? So this is also something you look forward to in terms of, not look forward to, something you look at when you're analyzing is you want to see that you're in a trend. I mean, just to confirm your trade pattern. So the trend is your friend here in the sake that we're saying a higher high and a higher low. In terms of momentum, if I was just to draw at this low or somewhere here, this is you could call RSI support. So dropping below this 45 on the daily, dropping below 45, you would start to say, okay, we're turning around. We're not really on our way up. So this is something you would look at. And then if you look at the money flow, there's not really much to say because it's in the same direction as the trend itself. So there's not much to ascertain on the 4-hour chart when it comes to the money flow, because it's just also sloping to the upside versus the RSI, which is horizontal. So in this case, and sometimes you have to decide what you want to look at, but in this case, it's very reasonable to keep your eye on the RSI because this horizontal level is quite important, at least on the daily. And you'll see that this changes if you go to the 4-hour and so on. It's a different picture. So you want to be careful that you're following RSI, MFI, or anything else. Make sure you're looking at the appropriate time zone. That's about it, guys, for today, unless you have specific charts that you want us to look at. Pampai, I don't know if you want to share anything.
Yeah, I do actually. I'll
go ahead.
Transition
yeah,
over
please.
onto the stream quickly.
Sure.
Bear with me.
Yeah, go ahead.
Okay, so
I'm going to stop sharing.
Okay, so looking at the Bitcoin chart, from my perspective, you will see that I've got a few lines of resistance and the rising wedge that I had previously drawn out. So we've got a fairly long-standing line of resistance here that we've been struggling to break. We've hit it 1, 2, 3, 4, 5, 6 times now and failed to break through. And price action has seemingly got a slight uptrend happening since the 8th of July, which we keep hitting this line of resistance and moving down. But we can also see, if we look at the squeeze indicator, that there is a squeeze that's happening, or that's potentially happening, which the histogram is showing that this should be in an upward direction. We are actually right now at a point in my eyes of something is going to happen, something has to happen, whether that be up or down, I'm not sure. We have got a positive money flow. This is on the 2-hour chart. I'm looking at this, by the way. But we're coming into a point where we've got resistance that we're hitting from both sides, from the top and the bottom, from a trend line and from this major line of resistance. And if we break through this line of resistance, then I think that we might see quite an explosive move to the upside. I haven't looked at the Bollinger Bands yet, but from what I can see, this move should be up. And I've also heard, as I said earlier, quite a few people talking about the idea that there's going to be a critical move coming up very soon. And it doesn't appear to be that anybody is suggesting that this is a bearish move, which usually with crypto YouTube and with Telegram, you find that if it's going to be a bearish move, that everybody is shouting FUD, 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 and there's a lot of viewpoints that are coming across of everybody's going to be destroyed, we're all going to be wrecked, and they're trying to make everybody feel like they should be selling. So from that perspective, I think that we could potentially be in for some good price action coming up on Bitcoin, and therefore obviously the rest of the market is also given that a little bit of relief to be able to move. You can see also from my my watch list that there's actually quite a few altcoins that are doing okay today, that are within the sort of 15% to ranging right down.
Bumpy, those
negative as well, but
those small gold diamonds on top of the chart, are those bullish?
yeah, they are. They're a bullish continuation indicator.
Thank you.
And also, if we look at the market cipher B indicator, we can see that there are no signs on the momentum indicators that would suggest that we are turning and that we are slowing down in any sense. We've got a.
Can you explain?
Sorry.
Sorry. Can you explain to us how to interpret what you're looking at right now?
Okay, so the dark blue pattern here, that is the lagging momentum indicator, and the light blue is the leading momentum indicator, and they basically suggest that our momentum is heading in a certain direction. Obviously, the lagging is showing you what has already happened, and the leading is showing you what's currently going on. And when you see these intersect, like at previous points here, you would see on the chart that as they've intersected and the direction has changed, then price action has moved and gone in the opposite direction. The only thing that I can see here that's even slightly bearish is that the volume weighted average price has taken a turn to the downside, but I don't see that as necessarily being an indication on its own right of any kind of bearish movement. It might just be that the current candle has been up higher, the price action's been up a little bit higher, and then it's come down a little bit, but that will change if we move up.
Thank you. And how do you yeah, go ahead.
We've got a long signal here on the momentum indicator, and there's no sell signals. So for the moment, definitely, I'm seeing it that we are in positive price movement. And so here, look, this will be why the volume weighted average price has come down on this hourly candle, 2 hourly candle. We can see that we've got a red candle that started, and it's hit this resistance line and come back down. So other than this little fake out here, that resistance line has actually been adhered to pretty solidly for a while. And
Very interesting.
as previously said, I think that if we can break through this, which we've still got another probably 12 hours or so, maybe longer, maybe till 1 o'clock tomorrow afternoon before we get to the end of this resistance zone, which we do sometimes see with Bitcoin, that it'll be moving in between two resistances and it'll gradually get to a point where it can't go any further, and it either starts the next candle below or above the resistance lines, or it absolutely explodes and we see price action move in a heavy fashion. So I grab the
Is there a potential? Is there a potential head and shoulders there in that little zone?
on a diagonal? Yes, I guess so.
Hmm.
Um,
But market cipher is showing some continuation, right? Which is a good thing, positive
yes,
thing.
yes, definitely. If we look at the Bollinger Bands, we know that the squeeze indicator is showing price action between the Bollinger Bands and the Keltner channels. And usually, if we are above the center Bollinger Band, then price action, then we'll move up. And if we're below the center Bollinger Band, when the squeeze fires, then it will move down. So currently, including the idea that these EMA ribbons are starting to turn blue and white, which is a positive indicator. It means that we're in an uptrend. It recognises that we're in an uptrend on the 2 hour. Let's have a quick look at the hourly. Yeah, same thing on the hourly. Look, it's showing it even more. This would suggest that that we are in an uptrend, which I guess has started around the 32,600 mark here, when just after we've seen this red blood diamond on the hourly.
Very nice.
I think that's pretty much all I've got to say at the moment. This resistance line having just been met and price action coming down slightly from it, I would usually consider that a point of potential failure, but we are still within that hourly candle, so it is entirely possible that we will change direction and there'll be more positive action. Do bear in mind, I know that the whole Friday to Sunday weekend trading thing is taken into account a lot of the time, but we are also heading towards the CME opening again, which is I think 6 o'clock or 7 o'clock. So at that point we will see whether the CME gap, if there is one, will get filled, and we can then start moving onwards.
Where is the gap right now?
I'm not entirely sure. Haven't looked at it, I'm afraid. Sorry. If you'd like to bring it up on your own chart, we can swap back.
No,
Happy to.
All right. So unless anybody has any questions, we'll wrap this up.
Excellent.
There's a few people in the chat. Let me just see here. No, nobody has questions. All right, guys. So thanks again for joining us. We'll be doing this every week at the same time, 4 p.m. CET. Next one will be next Sunday, and we'll have more from Sylwia and others on the CST. Thank you. Don't forget to follow us on Twitter, like our videos on YouTube, and follow us on YouTube as well. We are going to be doing this regularly. We're also proud to have a lot of FA videos on YouTube, a lot of how-to videos on YouTube. Very useful. I've used them a lot myself to navigate through how to start a new, open up a new wallet or bridge a coin. So many different good videos that I would strongly recommend that you scan through and listen to the ones that could be of benefit to you. Thank you again to everybody that participated today, and looking forward to seeing you and speaking to you all next week.
Thank you very much, Bilo, and thank you very much to Sylwia for contributing today.
Thank you, guys.
It's been a pleasure.
Thanks, Pampai.
Cheers.
Bye-bye.
Bye-bye.